If you'd like to get cash out of your home, but you think you have bad credit, then you're in the right place. My name's Scott Hastings. I'm a mortgage broker based in Charlotte, North Carolina, and I can help. So, the first thing to think about if you're looking to get cash out of your house is what is the value of your house? So, you can get cash out of your house up to 80% of the value of the home. And for 2024, we're going to talk about FHA loans for a minute. There's a FHA loan limit. So it depends on where you live in the country, but for most parts of the country, that loan limit is $498,257. So if you have a home that's valued up to $622,000, then you could get the maximum FHA loan when it comes to cash out. The next thing to think about, obviously, is your credit score. So you're listening to this video because you came across it looking for a solution to get cash out of your home with bad credit. So what is bad credit? Well, it depends. It depends on the type of loan you're trying to get. So it might help to say, what is good credit? I would say good credit is anything over a 700 credit score. Obviously, the higher, the better. Anything below a 680, well, this is still good credit. It's not great credit. When you get down to 660, you're getting closer, obviously, towards not great credit. And this is where we need to start talking about, well, what kind of loan can you qualify for according to your credit score? I mentioned FHA before. That is really the primary loan if you have bad credit you're going to be looking at. Bad credit is really anything under a 600 score. It would definitely be considered bad credit. The good thing about an FHA loan is that you can actually get cash out of your house down to a 500 credit score. Now, it's all dependent on what's making the credit score of 500. For example, you can't have any mortgage lates over 30 days late in the last year. And really, you're probably only going to be able to have one mortgage late in the last year. And you might have to do something called manual underwriting at that point. But anyway, that is the best thing about a FHA loan for a bad credit cash out refinance. The next level would be probably a 660. That's for a conventional loan. Obviously the interest rate is going to be affected. A lot of things are going to be affected. You also have to think about your debt to income ratio. So debt to income ratio, very simply, is just the amount of debt you have in relation to the amount of income you receive, and that income is before taxes. The nice thing about an FHA loan is that your debt to income ratio can be higher. Technically, it can go up to 56%. But if you have a credit score, certainly below 580, and then when you get even under 580, then you're probably going to be looking at a maximum debt to income ratio of about 43%. Now, what can obviously help with a cash out refinance is that you're paying off all of your high interest rate credit card debt and maybe some other things. So your debt to income ratio is going to be able to be lowered a lot, making you more able to qualify. If you have, say, a VA loan or a veterans loan, there isn't technically a minimum credit score that they've written, but we know that most likely you're going to have at least a 580 credit score to qualify for that. So these are just some bullet points to be thinking about. If you found this video helpful, please click like and subscribe. That would help me out a lot. And if you want to view another video that's has to do with FHA loans, just click right here. Thanks a lot.